What is going on, everybody? All right, so for today's vlog, we're gonna do something a little bit different. We're gonna be jumping a little deeper than we usually get into it with the market numbers, because I'm sure you've all been hearing some things with the media, what's going on with real estate agents. Everyone's giving you some sort of perspective. So I want to give you the actual numbers, and you can kind of make a decision based for yourself. I'm gonna give you my opinion as well. Please bear with me. I usually try to keep these videos under 2 minutes. However, there's way too much content to cover, so it is gonna be a little bit longer than usual. If you don't want to watch the whole thing, don't hesitate to email me. I'll send you a written blog so you can kind of just read it at your own leisure. All right, now before we get started, understand something. Everyone's got a bias. Real estate agents obviously have a bias, and as well as the fact that media has a bias. The media has been talking about a real estate crash for years. I've been in the real estate business 12 years now. I remember when they had a cover on McLean's was telling you to sell your real estate and buy research and motion stock because the market was gonna crash. We all know how that worked out, okay? Things are cyclical, things go up and down. It's not the end of the world. If you have any questions, you disagree, you have any comments, please let me know. However, I must say, for the ones who are gonna DM me, yell at me with all these big caps locks and just be vulgar and stuff, you're gonna get blocked and banned. It was kind of funny at first, but it's kind of weird that that's what you do in your spare time, and we're not gonna play those games anymore. So let's get into it. Now, looking at the numbers, the biggest shock is the average sales price, hands down. Now, the Durham Real Estate Board has a weird way of calculating. I've sent an email out to find out just how it is they break it down. I'm looking at average property values across the board, and I'm just comparing it to what it was the month before. So when you look at the average property value, in June, Durham Region's average real estate values were $615,064. If you recall, a few months back, I think it was March or April, we had cracked the $700,000 mark for the first time ever. So we've already seen it recede $85,000 up to June. Now in July, we're actually at $569,748. So we've dropped 8% from June to July. That's fairly drastic. Now, comparing that to what it was a year ago from June to July, we've got 542,000 in June, went up to 547. So you saw a slow and steady decline. 1% a month is actually still pretty extreme, to be honest with you. So we were up 1% over that same period, and now we're down 8% in property values. That's the most shocking and drastic number. I don't see it going much lower. We're at last year's mark now. And what was happening a year before, it was a hot market, but we weren't, there was fundamentals behind that kind of growth. We were underpriced, hands down, compared to York, Peel, and all those areas, and we need to see some growth. The 40% was the scariest, and I was telling everybody, even in my videos, real estate is supposed to be a stable asset class, so when you see a 40% growth, you're gonna see some sort of, vulnerability in that sense. You got that last, when somebody's stretching, you let go, boom, it's gonna kind of come back to reality. So that's what we're seeing happening right now, unfortunately. Now, new listings coming to market. In June, we saw 2,639 new listings get listed. In July, we saw a dip down to 1,900, 28% decrease month over month. However, a year ago, in the same time period, we saw a dip of 17%. So we see a decrease in listings at this time period because summertime is usually sometimes when people go, I'm gonna take a break for now. The kids are out of school, we wanna go camping or whatever it is, and they put real estate on the back burner. There's still obviously buyers and sellers out there, but we see an influx back in the fall market, okay? However, active listings, which means listings that weren't listed this month, just carried over from the month before, we've got an increase or a decrease of 2% month over month as opposed to 9% last year. Okay, so what's happening is there's more listings carrying over because last year our monthly inventory was lasting, I think, a month, and you're selling out. So the most drastic issue is the fact that the year to date we've seen an increase of 39% in the number of listings on the market. This makes sense. Sellers are going, okay, might as well try and cash out now. Also, the fact that a lot of people are listing, canceling because their houses isn't selling. They're not sure how to price the property, and they keep kind of going back on. I think that's going to skew the numbers a little bit, but not by much. Maybe our listings are increased by about 33 to 35%, which is still fairly drastic. Now, number of sales. So this is where the newspapers go, sales have dropped from June to July, very drastic. Yes, just like how I said, listings drop from June to July just because activity is going to slow down. Same thing happened. We went from 997 sales in Durham region to 749. That's a 24% decrease. But let's take a look at last year's. Well, we were at 1,471 for June. We were 1,200 in July. So you still see an 18% decrease in the same time period. So yeah, we're seeing a little bit of a bigger difference, but the newspaper's just talking about, oh my God, it's a 25% decrease. Yeah, but you're looking at it on a month-to-month basis. And as I tell you guys, always look at a yearly comparison, because that's going to give you a true reflection. If I compare a jewelry store sales in December to January, you're like, oh my God, the retail market's crashing. No, December is generally obviously a much busier year than it is in January. So it's not a very true assessment of somebody's numbers when you're looking at it on a month-to-month seasonal basis. All right, so hopefully that's making sense. However, year-to-date number of sales are down 8.3% compared to a year ago. We had a very active market last year. So that's where the Durham region's numbers are a little bit skewed as well, because they're looking at it on a completely, they do a total of the year and they compare it, so they're still comparing it on the up to that point, you know, up to July 31st, or January 1st to July 31st. It's down 8%, but we can't compare it just like that. We need to compare July of 2017 to July of 2016, and we're down about 38% in the number of sales. What does this mean? It means buyers have no confidence and they're sitting at the sidelines going like this. They're waiting to see how low are the prices going to go before they jump in. So the only ones that are buying right now are the truly motivated ones, the ones that have already sold their house, they need to buy, and the ones who are really active in the market. We're going to see the number pick back up in September. I know we're going to see the listings pick back up. The question is, are the buyers going to jump back in? I think at this point, we're back, basically the year has been erased. All right, that's where our prices are at right now. So I think people are going to understand that, okay, it's not going to go much lower. The fundamentals behind our pricing and you know, our growth is still strong. It's still a good market. It's still, you know, things are good. What's going on around here? It's an overreaction. The market always overreacts, whether things are going well or things are going poorly. This is true for anything, stocks, real estate, anything with a mob mentality. When things are going well, it's never going to end. Oh my God, 40% year over year. Real estate prices, great. We're going to be worth millions of dollars in the next couple of years. False. Right? But everyone jumps on board, and the same thing happens. Everyone's going to kind of take a step back and relax. Our months of inventory is at 2.9 right now, as opposed to 1.2 a year ago. That means we're still a seller's market, guys. Okay, that's how spoiled we've been for the last couple of years, is the fact that, oh my God, you put your house on the market, it's going to sell in a week. Look how great we are. It's just so easy being a real estate agent. No, now you actually have to market it. It's still a seller's market. Now, if the trend continues, if the sales continue to stay down and listings continue to go up, it's going to go from balance to even a buyer's market. All right, and we'll keep you posted on that as well. What does this mean going forward? I personally don't think, I think the worst is behind us. I hope the worst is behind us. I believe it is. The population growth is still there. Jobs are still strong. People can still afford what they're buying. It can't go much lower because our replacement cost is higher these days. You can't even build a house for how much it's going to cost you to buy one. New builds are priced way higher than we are, and they've all sold. So I think we're going to see the growth continue. I think we're going to see it at a healthier rate. I think reality kind of smacked people in the face, and everyone's kind of going, oh, wait a minute, real estate's not meant to just go up 40% year over year with no fundamentals behind it. It's very important to know these numbers in your market. You need to know how to price. Pricing strategies are very important now. It's more than just putting your sign on the lawn. You can't just kind of expect things to go into multiple offers, you know, with no fundamentals and no marketing behind it. You have to market it properly, but you also have to price it properly. The buyers are out there, but they're not dumb, and it's payback time for them. For them, they're saying, okay, if you're priced too high, we're not going to go with you. We're going to go check out another house. You're not the only 3-bedroom in a certain area. You're competing with a lot of people. You're going to have anywhere from, you know, 10 to 15 comparable listings in a small geographic area, and you're going to see the top 3 or 4 sell, and the rest are going to just kind of sit there, and then they're going to reduce until they're at a price point where the market says, okay, we think you're worth it now, and they're going to sell. One thing I got to point out, I'm always here to answer questions. However, I cannot answer specific questions on your listing. I can't answer for things if you're listed with somebody. It's just, you know, you're listed with another agent. You should be asking them these questions. You should trust them. I'm not the only agent that's got these numbers at their disposal. There are a lot of smart and educated agents out there that are going to be able to guide you. But if you do have another agent, I cannot personally help you just because you're under contract and it's just against RICO guidelines. So unfortunately, I can't help you. However, ask your agent these questions. Give them the numbers I'm offering. I'm offering these numbers for free to people because I want people to educate themselves and not fall for all the hype. Whether it's agents telling them everything's going to be fine, whether it's the media saying the sky's falling and just sell everything and move. Just understand the numbers and it'll give you a clear idea. So I think the last year has been a bit of a seesaw, but I'm curious to see what's gonna happen in the next couple months. If we continue to drop, I'll report that to you guys as well. But like I said, any questions, comments, concerns, let me know. Unless you're listed and unless you're a troll just wanting to get in a fight with me, because you're gonna get blocked right away. Anyways, guys, Jacob's at SoldByJacob.com. Holy wow, 10 minutes. If you've watched all of this, cool, good on you. Jacob at SoldByJacob.com. Facebook, Instagram, both Sold by Jacob. Thanks for watching.